Today, Bitcoin and Ether inch lower as investors try to grasp the state of the U.S. economy. Stablecoin issuer Figure Technologies upsizes its IPO. And Solomon Tesfaye, Chief Business Officer at Aptos Labs, discusses Nasdaq's tokenized securities initiative. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices in the red as of midday after job growth was revised down by 911,000 through March, signaling that the U.S. economy is on shakier footing than realized. As of noon Eastern, Bitcoin was down more than 1.5% to under $111,000. Ether was down 2% to $4,284, and XRP dropped more than 1% to just under $3. Okay, let's talk about the top stories. Stablecoin issuer Figure Technologies upsized its initial public offering, reflecting growing demand for crypto-related stocks. The price range for Figure's IPO is now between $20 and $22 a share, according to an SEC filing. That's above the initial range of $18 to $20 a share. The company, which offers blockchain-based home equity lines of credit, also increased the number of shares to 31.5 million from around 26 million. Figure first disclosed early last month that it confidentially filed with the SEC to list on a U.S. exchange. Figure lets homeowners open revolving credit lines up to $750,000, and the company joins a slew of crypto companies rushing to IPO in the U.S., including Circle, Galaxy Digital, Gemini, and more. And a California man was sentenced to more than 4 years in prison for his role in a multi-million-dollar investment scam with crypto ties. Yesterday, the Department of Justice announced Sheng He's sentencing after he pleaded guilty to conspiracy to operate an unlicensed money transmitting business. According to the DOJ, the defendant was part of an international investment scam group that promised victims high returns on what they thought were digital asset investments. More than $37 million were stolen from Americans through these scams, and the defendant from California laundered much of that money through U.S. shell companies, foreign bank accounts, and crypto wallets. The defendant was also ordered to pay nearly $27 million to victims. All right, turning to Nasdaq's tokenized securities initiative for our main story. Yesterday, we told you the Nasdaq is asking the SEC to amend rules to allow tokenized securities trading. In a filing submitted yesterday, the exchange proposed rule changes that it says would clarify how it would trade tokenized securities. It also proposed to change the definition of a security to also include a tokenized form that utilizes blockchain technology. This morning, I spoke with Solomon Tesfaye, Chief Business Officer at Aptos Labs, about this development. Let's talk about the Nasdaq and its push to launch trading of tokenized securities. I'm going to keep it simple to open. What is the significance of this and why is it necessary?
So first of all, thanks for having me. So this is the first time a major U.S. exchange has sought to embed blockchain into the public equity markets. This is essentially further validation that tokenization is moving more mainstream and that the value propositions are very, very clear. Nasdaq is not the first to desire their interest in pursuing basically tokenized public equity. There's been a number of other players, Coinbase, Gemini, Kraken, a number of other bulge bracket banks like Citigroup and Bank of America that indicated that they also are looking to pursue this. But the reason why this is so important is they're looking to actually mirror traditional public securities with a blockchain version as opposed to using more of a synthetic approach.
So go a little bit further on that. How would this ultimately impact the trading and investing world? Because like you said, it's not, Nasdaq isn't the first, but it is, a pretty big name, I think, when you think about the traditional stock market. So with tokenization, yes, it would be faster and more efficient. Can you talk about some of the other implications that there might be, when it comes to, market structure or investor protection? What are some of the things that we should be thinking about there?
So really, they're actually approaching this where the blockchain public securities would actually be an exact mirror of the traditional securities. So they'd have the same protections from an investor protection perspective, as well as they'd use the same order book and routing system. What really is a game changer when you start to adopt blockchain rails is really the operational efficiency, the actual ability to have instant settlement or also pursue 24/7 access if it's appropriate for the right asset classes. So it's really more so bringing operational efficiency to the back-end infrastructure of public equity.
who would own that underlying asset? And please correct me if I'm wrong, but my understanding of it, because we've had this conversation around announcements from Robinhood and Republic and so on, is that it's a digital representation on the blockchain, but there's some question about who actually owns the asset. So wondering if you have any insight on that you can share, and how that would affect things like voting rights, for example.
So what's unique about what Nasdaq's pursuing in this particular case is the tokenized instruments actually retain full shareholder rights, as opposed to being a carbon copy or a synthetic product like you've seen offered by other Web3 players. So it's actually one-to-one in terms of all voting, all basically the intrinsic value of the underlying asset, the ownership, all remains the same. The only difference is really it's a back-end infrastructure. This is just simply a technology evolution, similar to when Nasdaq introduced electronic trading in 1971. This is simply a technology play as opposed to anything changing regarding the actual underlying security.
Talk about the risks involved, and I mean specifically the growing pains, right? More than anything else, it's literally Nasdaq, and so I trust that they are involved with all of the right players and know exactly how best to move in this direction in a way that is responsible and beneficial for everybody. But what are some of the growing pains around technology and security and regulation and so on that the market and all of the observers in the crypto industry should be aware of?
Just like any technology that's being incorporated into a regulated environment, of course, there's some interoperability points that need to be navigated. But from a risk perspective, we're still the plan is still to use DTC from clearing. You're still going to have the same QSIPs. You're going to have the same regulatory oversight and the Nasdaq surveillance and investor protections. So really, from just a fundamental oversight perspective, nothing really changes. This is simply a evolution of technology.
Tell me about the role of regulation. Washington is clearly supportive, but is there anything specific that you'd say we need to see from the regulators or from Congress in order to keep up with a big push like this? Because this is something we've been talking about for many, many years, and it's been very exciting but very fast moving to see the Trump administration come in and move so swiftly on all of the promises that they made to the crypto industry. So like you've said, this is not the future, it's actually here. But it is the most heavily regulated industry. And what does Washington need to do to keep up in an appropriate and responsible way?
So really, there's been a lot of guidance on the stablecoin front in terms of the frameworks and the actual regulated bodies that would be managing the oversight related to stablecoins. But also on the securities front, we need to make sure that policies are also matching the same tempo. Because one thing we don't want is there to be a disconnect between securities adoptions of a blockchain versus really the cash leg or the stablecoin leg of the technology. You want there to be a one-to-one, so you really unlock the full value proposition of blockchain.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.